Right, good evening everybody, it's Richard Faulkner here for Forex Live Trading Alerts. It's Sunday the 12th of June. Yeah, Sunday the 12th of June. And basically what we're going to do is we're going to have a look at the markets do a bit of technical analysis for Monday morning. We're going to do a few predictions, hopefully get ready for the market, find out what's going to happen, wake up tomorrow and trade accordingly. So I'm going to run you through how I actually do my technical analysis, what we look for, and how to actually determine where the market is going to go. So we'll start with the pound dollar. I'll bring the 4-hour chart down. Now I always start with the higher time frames. If you're trading intraday, I think this isn't to say it's a written rule, but anything over a 4-hour chart, trading intraday is, it doesn't really have any significance to it. Although you must be aware of various trends and the direction of what the higher time frames are saying. The 4-hour is pretty much the limit to where you want to be. Anyway, we've got a strong move up here. We have A to B, and C to D, bringing our Fibonacci extension level down to there, and you can see we're coming in bang on the 127 Fibonacci extension level. So we've got an ABCD pattern. It's not quite a Gartley pattern, or you get 61.8 fibs somewhere around here. This, to me, is actually signalling it's going to be quite a good reversal point. Now, we don't actually trade ABCD patterns. What we actually look for are channels, and I'll show you how we actually draw our channels in a minute. But this is a great reference point to be able to now go into the market, find your channels, find your possible reversal points, and hopefully enter the market accordingly. So this is our higher time frame. What we're going to do now is we're going to jump down to the lower time frame, and we're going to try and find a channel on this lower time frame. And really what I can see straight away is 1, 2 reference points, copy that, place that there, and now you can see on the lower time frame we have a channel with a possible reversal point coming in somewhere around the 6201, so the 6200 level, which is obviously a nice round number which a lot of people tend to like as well. Finally, what we also want to be looking at is there any level of support around here. Scroll back. Not a huge amount of support actually, maybe a little bit across here, but nothing of any great significance. However, because we do have this 127 extension with an ABCD pattern and the channel, this is basically telling you there is a very high probability trade here for a good reversal point. So for Monday, what we're going to be looking here is for, on the lower time frame, which will be the 15 minutes, which is where we actually enter our trades. Here you can see we're actually forming almost a triple bottom. Now this actually looks fairly bearish to me, but on the 15-minute chart, but if you look here on the 1-hour chart, you can actually see we have a little bit more scope to come down, touch this trend line here, and then hopefully move back on up. So really what we're going to be looking for Monday morning, and hopefully this isn't going to happen in the middle of the night, is we're going to look for some reversal candles to come in somewhere around the 6.2 level, which is just below this low here. And you've got to remember there are going to be stops below this point here. where people may have thought this is a double bottom, so they'll run the market down, take those people out just below 6.2, hopefully reverse the market, and we could start heading back up towards this upper trend line here. So that's basically what we're looking at for the pound dollar. Now if you look at the euro, and we'll just quickly run through this on the 1 hour chart. You can actually see we've come down to a channel line here on the 1 hour chart as well. Now this is adding some credence to the pound dollar trade, simply because although there aren't any Fibonacci levels down here for the euro dollar, obviously if we're looking for pound strength, we're going to look for dollar weakness. And if the euro is actually lining up in a similar sort of fashion, then this is just adding extra weight to our pound dollar trade. So with this being down here at support, and again you could possibly be looking at maybe just dumping down below this trend line here, touching this, and then reversing and moving back up. So I mean they're both saying the same sort of thing, and they're both suggesting that we are actually going to see some dollar weakness at the start of next week. Now, as it is the first video that I've actually done for this website, what I'm actually going to run through very quickly is just how to draw trend lines. So if we go back to the pound dollar, and this is specifically for channel trading. What you're looking for is obviously you need your first 2 points of reference. So if we can take anywhere on this chart, for example, if we took this here, what you got is your 2 points of reference here. So we have a touch down here at this point here, we've got a touch down here. What you can do is take your trend line here, copy and paste that, place it at a previous swing high. You can see here that the price actually comes up, touches this perfectly, then reverses and moves back down to the 200. Now you would actually expect this, as it comes up and touches this on the fourth touch, 1, 2, 3, 4, you would have actually expected this to move back down. But this being forex trading, they would have actually, the market makers, especially as there's a level of resistance here, would have actually seen stops building above this point here. So they will have run the market up, just broken this trend line slightly, and then moved the market down in the direction that you originally wanted to trade. And this is a fatal mistake that a lot of beginners actually make. They either move the stop too early. I mean, we are actually looking at, if you look at 6461, 6353, you look at nearly 100 pips there anyway. And depending on how much you want to make in the market is entirely up to you. But as a rule of thumb, the fourth touch is always the biggest move. So you're going to have to leave your stop above this high here. I would actually suggest about 20 pips above this high here, and certainly above this trend line here, just for these eventualities where they do run the market up. If they see stops building, they are going to go and take those, and then basically run the market in the direction. But we're just digressing slightly. What we're looking for, like I said, is that fourth touch. Now, how do we work out what's going to be a good channel line and what's not going to be a good channel line? Because you can see here, I think probably if we do have 1, 2 there, might even work on this one here. Look at that. 1, 2, 3, 4, and up to the fourth touch, and up to the other side of the channel line. What you have to remember is that you have to see that channel line touched in order to gain a decent reversal, a decent chance of the price reversing. Because if you don't wait for that channel line and it doesn't touch, what will happen is the market makers will see this, and they will actually see people getting a little bit excited, stop the price just before the channel line like they have here, get people to commit their funds to the market, thinking they're missing the move, and then basically move it down and then reverse the price and move it back up. And you can see here now how we have 1, 2, 3, no touch, moves through, breaks it, becomes support, and then moves on up. So really, I mean, it just takes practice, time and effort, but if you can actually work this out, 9 times out of 10, if they are doing this and you see this, stay out of the market. Certainly don't start committing your funds down here, because you're just creating a bigger stop loss for yourself, really, when you need to come and see the market touch here. But what I will show you as well is the fact that a lot of people see this and think, oh, well, you know, this hasn't worked. But all you have to do is be patient, wait for another swing high, and if you look at that, 1, 2, 3, 4, and a move down. And now what we can do is that 1, 2, 3, 4, move down. This is possibly our inner channel line now. Now these inner channel lines actually tend to either act as support or act as resistance. So if they are broken, then what you wait is for a retest of this and then for a further move down. So for on Monday, if this doesn't hold and Monday morning we don't see any reversal bars, then obviously what we're going to do is we're going to wait for this to break, retest here, and our next profit target is going to be first target there, second target down here where this line ends up. And that's basically that's all you have to do, and really what you want to be doing is tying this in with Fibonacci levels, Fibonacci extensions, ABCD patterns, using your channels as your main trading tool, but just getting as many possible things to line up in order to be able to take a strong, high probability position in the market. As far as stops go, especially being a Sunday night, it would not surprise me if we actually gap down below here. It's potential that they may already have what they want and they might just gap it up and run it. You know, this is the market. You're never going to know for sure. But regardless of that, as far as stops are concerned, we're going to want a stop somewhere down in the 70s. Call it 7.5. So you want your stop somewhere down there. If we do break down, we could quite easily just reverse and fly back through here. If we do break down and we see this line holding, then it's either going to be a question of taking a small loss or getting out break even. Certainly if we see a reversal candle come up into this area here, then we're going to want to get short and go down. And this is our Monday morning plan. So that's it for our Sunday night wrap up. If you do like what you see, we do trade live in the market each and every day. The website is forextradingalerts.com. Please come and check us out, and happy trading. Okay, thanks for listening. Bye bye.